Jack, one of the hottest things with institutional investors and high net worth investors right now is the private credit market. It's now trickling down to the rest of us, and you've written a funny column about it, actually.
Well, investors are piling in. The private credit is a high-yield loans. They're made to risky businesses, and the fees are high. The pricing is opaque. The IMF just published a report on private credit. They use the terms vulnerabilities and limited oversight in the subtitle of the report, so they're not crazy about it. If you're looking at private credit, consider collateralized loan obligations. Don't make faces, Andrew. The name is ugly. It's like if irritable bowel syndrome were an asset class, I grant you. But the head of B of A's research committee says that CLOs offer better risk control, more transparent pricing, and lower fees than private credit. AAA CLOs have never had a default. There's an ETF for them that yields 6.7%. The yield, write this down, Andrew, it's JAAA. JA is the ticker.
And what if you want lower quality credit?
Well, there's a JBBB. I don't know how to pronounce that.
That's what I was hoping for. I'm trying to get that out of you, yeah. All righty. Andrew, you think there is money to be made by taking travelers cruising down the Rhine or the Danube. Tell us about that.
Well, Viking Cruises, which is the leader in high-end European riverboat cruising, is due to go public in the coming week. And I think it could be smooth sailing for that deal. The company is probably best known for some of its ads on Masterpiece Theater that tout the refined cultural experience and fun you can have on their riverboat cruises. They have about a 50% market share in the European market, and it's coming to market this week around $25 a share. The deal will value the company at around $10 billion. It's about $1 billion offering, and it sounds like it could be a winner. It's trading for about 10 times free cash flow, which looks pretty reasonable considering the growth prospects and the nice niche that it has.
And obviously travel seems to be constantly increasing. That post-COVID, a lot of people want to get somewhere fun.
Their boats, they don't allow kids on the boats, no one under 18, no casinos, and so they're trying to make it it's not family friendly, but it's mostly for older people. They target the 55 and older market.
And they screen Masterpiece Theater probably at night. Right. Megan, you found an interesting investment closer to home.
I really am. I'm talking Timken this week. So actually, our colleague Teresa picked it. It's still an attractive buy. You might not have heard of this company, but they're very much in the bearings market, which of course is in pretty much every type of machinery you can imagine. Now, it's not something that's going to knock your socks off, but it's more of a defensive play that arguably shouldn't keep you up at night.
All righty. Thanks very much, Megan and Andrew and Jack, CLOs. All righty. To read more, check out this week's edition at barrons.com. And that's all for us. We'll see you next week on Barron's Roundtable.